Hello, everybody. Today is Sunday, October the 26th, 2014. My name is Michael Wright, and this is the outlook for the week ahead from an Elliottwave perspective. Just before going forward, please do pause the recording and read over our risk disclaimer. Alright, so let's jump right into the markets. We're going to take a fresh look, a fresh perspective on the markets across the board as we prepare for this week's trade and also the last week for October. So first and foremost, we have the euro dollar under pressure. Also at the same time, it has broke below key support, now turned resistance, and we look for some downside price action to possible new lows. The reason why we say that is because looking at it from a daily movement, okay, what we have is, if this is an A or a B or a 1-2, likely an AB, the next downside targets is not until 123.43. There is some momentum divergence which is brewing, but a new low to match that fib will then provide a bigger base for a reversal, and then we'll put some color behind that daily move of again, first wave, second here, this possibly being a third, because we did overcome that 161.8% fib extension, and now looking for a fifth wave down towards 123.43. And then a possible move there. Now, if we do head higher, I do like shorts around 129.50. So that would be ideal. But right now, as we have the 4-hour trend line break to the downside, preferred for the euro is shorts. Now, for the Aussie dollar, right? Aussie dollar, we're patiently waiting to see how this pair develops even further. Okay, as of right now, it is still within a triangle. Okay, so want to see how it breaks out of the triangle. Whether it's the upside or downside, we don't care. There is some preference for the upside. If we do make a 4-hour close below or above 88.10, then we'll look for that 93 level. If it makes a close to the downside, we'll look for shorts, and this would be a 1, 2, 3, a fourth wave, and then a fifth wave blowout. The reason why this is ideally a B or a fourth wave is because triangles from an Elliottwave standpoint do indeed incur within B waves and fourth waves. Okay. Also taking a look at another major pair is the dollar yen. Okay. Dollar yen currently approaching key resistance. All right, and so long as we stay below this level, downside towards that 104, even 102 marker is could come to light relatively soon. So keep an eye on the dollar yen, and matter of fact, all yen crosses. Okay, all yen crosses. Nice gap to the upside across the board. So let's see how things develop as we kick it off. On Monday, it is actual Labor Day in New Zealand, and then so be careful of some light action into the Asia session, as things may not really begin to move until possibly the U.S. market opens. And also looking at the Kiwi, downside is preferred on here too. So Kiwi seems to align a lot with what we're viewing for the euro. Dollar yen still like to the downside, and that gives basis to a Kiwi yen. Nervous about a Kiwi yen because from a risk reward standpoint, on a spot level, it just will take too much risk. to take on the trade. So watch how that pair does develop. But if you are looking for shorts, as Kiwi is bearish and the yen is bullish, then short-term base you could literally eye this descending trend line. So as long as it stays below 85.12, look for further downside into possible new lows. Okay. We will monitor price action and post setups as we see it, as the market does develop. If you have any questions, please feel free to reach out to us on Skype. You can Skype me at WTCG or shoot us an email at info@globalfxclub.com. Thanks everybody for watching the outlook for the next coming days, and we will post the midweek video on Wednesday, and that will be posted just for members in the members area. Alright, cheers everyone, and good luck trading.